Good night and welcome to another Mr. James Accounting tutorial. Tonight we'll be looking at the broad exam topics released by CXC for Accounting Unit 2. They have released 9 topics in all, and I'll be giving you an in-depth explanation from your syllabus as to what you could expect to see in your exams. So let's get right into it. Okay, we have here before us the broad exam topics released by CXC, and here we have the paper 2 in this column and paper 3 point or paper 3 slash 032, which is really the alternative to the SBA. We will not be looking at this since you who are in school and writing this exam should not be doing this paper. Okay, so these first 4 topics that you see here, module 1, all right. Overhead costs here is an overlap topic. You can find some of it in here, because overheads is one of the 3 elements of cost, and it could come in this section in module 1 as well as in module 2. It's also part of the allocation, absorption, and apportionment of costs using the various cost systems. The next 3 here is with module 2, and the last 2 is module 3. Okay, module 3, apparently they have left out some of the topics there that normally comes. These 2, of course, does not make up the 60% of the requirements from the syllabus, and that is required by the syllabus for each module for your exams. So they are in fact making some concessions to you there, and so you will get just 2 topics here in module 3. So again, the first 4 is module 1, next 3, 5, 6, and 7 is module 2, and 8 and 9 is module 3. Okay, now this is taken from the release from CXC themselves. So what we're going to do tonight is just look at each one of these topics and see what they involve in them, or what are the possible questions that you can get on them. Now, first topic is Introduction to Cost and Management Accounting. The importance and role of management accounting. This is where we talk about the provision of information and so on for management to make decisions, control and planning, and so on, and evaluating and assessing information for decision making purposes. The role of cost accounting is to provide the data so that management accounting could make the proper decision, informed decisions. And in this section here, you should expect to get some questions along those lines. And this part here is where I expect most of the questions to come from, the differentiating between cost and management accounting and financial accounting. You should be able to compare them in a table under different headings, like focus. Cost and management would be focusing mostly on the future, very little on past. Financial accounting focuses on the past, and it mostly in the form of reports on past performance. And other headings like users, cost and management is internal users, financial accounting would be uh, external users. So we should be able to differentiate between cost and management accounting and financial accounting on those various headings. You can get a table in almost any textbook that you look at now. Okay, so that's about this what this section is about, and we had very little of it in the last year's paper, but we can expect that we're going to get about 25% of the first question coming from this area. Then the second topic we will look at is cost classification, and this is where you divide your costs into different groupings or categories. We will do that for different reasons. All right, one of the reasons is when we want to value our inventory. We divide the cost into product cost and period cost. The product cost is the one that goes into the valuation of the inventory. The period costs are not costs of the product, but they are costs of the period that they have a time element in them. Usually you would find the administrative costs and selling costs, and sometimes distribution costs. The next reason is when we are ready to make some decisions, we have to arrange our costs into relevant and irrelevant costs for decision making. Relevant costs are usually uh, variable costs, and fixed costs are used for relevant, irrelevant costs. Then the variable cost is relevant, the fixed cost is not relevant. There are other costs like avoidable costs and non-avoidable. Avoidable is relevant, non-avoidable irrelevant. So you have to go through again and revise your stuff on decision making. You can get one of these three different types of decision to make or buy, add or drop a process, and accept or reject a special order. Add or drop a process can also be the same as adding or dropping a branch. Okay, or a product, right? So you have these three relevant things. You need to revise what is the criteria for making the decision. In this case here, if the variable cost in the basic decision without any other thing, the variable cost and the cost of buying is compared. Okay, or if you're using the relevant cost, which could be the variable cost plus, right? Planning and control. Again, you have to arrange your costs under those that you can control and those that you have no control over. Right? So plan costs, actual costs. Right? Plan costs are predetermined, budgeted costs, and actual, well, it speaks for itself. They are the actual costs that you would compare with the plan costs. Fixed, variable, and mix. Right? Fixed costs normally fixed for a period at a time, or it could be fixed for a number of units, and variable changes with the units, or variable changes with output. And mix is a combination of both. Some of it is fixed and some of it is variable. Okay, so look out for cost classification, right? They like to give you this here in a table, and you have to choose which one of the costs are fixed and which ones are variable. Here in relevant costing, the popular one is usually this. Okay, over the years this comes more regular than these here. So look out for that one. Uh, I think on my channel I will have a few videos explaining this here. Inventory valuation, we know the product cost would be FIFO, LIFO, AVCO, right? Those are the product costs. And for the period costs, we have the selling and admin costs. Okay, so let's move on to the next topic. The third topic is cost curves. And we have 6 types here on your syllabus that you are supposed to know. The variable cost curves, fixed cost curves, total cost curve, fixed cost curve, step fixed cost curve, step variable cost curve, and mixed cost curve. I will try to draw one or two of them here for you, but you must remember that although they're using the word curve, it is a straight line, okay? And it takes the form of y equal mx plus c. Now, I'm not a very good writer with this, so just bear with me there, because I'm going to explain it for you, just in case you haven't done it, or your teacher didn't know enough maths to give you this. Y is the total cost, M is the variable cost, and C is the fixed cost. X is the number of units. Okay, so that's the equation, and if you notice, it is the equation of a straight line rather than a curve. And you should have been acquainted with this in your CSEC maths. Okay, so the variable cost curve, you should be able to sketch it. When we say sketch it, we mean you're not going to use graph paper or anything like that, but you're just going to sketch them. I will try to show you what they look like here. Right, so that's your axis. The variable cost usually starts after the fixed cost, so you take your fixed cost up to wherever it is. See here, will tell you whatever, and your variable cost goes up there. Okay, if you ask for sometimes it is shown as running through here. We have 0 units. Alright, but this really is the total cost line, but is also the variable cost line. Okay, really the fixed cost plus the variable cost. Alright, the fixed cost runs across this way. So the total cost curve is made up of this fixed cost and the variable cost here. The variable cost is anything in between here. Right, so that's your total cost there. You're looking at those two. This could be your revenue line here as well. Step fixed costs, it's fixed for a short amount of units and then it increases. And you get another set of units, it's fixed again for these amount of units and then it goes up. And the pattern continues. Okay, step variable cost, similar, except it's a slope, like those things you have to use for a wheelchair. It looks on top of the fixed cost, you will get something like that. You know, different steps, but it's a sloping line rather than the one for the fixed cost. Okay, so the line is not going to go straight up here. It's going to be slant. So every time it changes, every time the line changes, the slope of the line, or M changes, you're going to get a different direction. And a mixed cost curve, right? Again, it has some variable and some fixed. So you're going to get this piece here and this piece here for mixed cost. Okay, so let's take a look at the next topic. But these are the only ones that you should be getting in your exams. Okay, our next topic is overhead costs. And the first item on it is the type of overhead expenses, and classified into two here, semi and semi-fixed. This is the same as sorry, that should be fixed and semi-fixed. And this is the same as what we saw previously in fixed, variable, and so on. We have to be able to here to separate these into their individual elements using the high-low method into fixed and variable. Okay, apportionment of overhead costs. We must be able to apportion the overhead costs using an appropriate base. We might be called upon to select the base itself. Example, things like floor area or number of purchase orders or something like that. Okay, this here relates to the same thing. Basis for the apportionment, of course. It must be some related thing related to the cost itself that we choose our base from. Then we have calculation of predetermined overhead rates, POHR, using just three items. One, machine hours, two, direct labor hours, and three, direct labor costs. Right? Sometimes they don't tell us which one to use and they give us the thing. We need to look at the cost and tell whether it's machine oriented or if it's labor oriented, depending on which is higher. Or well, the labor cost will apply as well if the labor cost is higher. Service cost allocation. This deals with, I think here this might be a misnomer as well here. It should be the apportionment of the service costs from the service cost centers to the production cost centers. And we call upon to use direct costs direct allocation, continuous allotment, or step-down method, one out of the three. So we should be acquainted with those. It came in last year's exam, so don't be surprised to see it again. All right. Direct and reciprocal, you need to consider where the service departments contributes to one another course, and these two here would take into consideration that method or reciprocity. Okay, so that brings us to the end of this topic. Let's take a look at what the next topic looks like. next topic is job costing, and it relates to specific objective 2 and to 5. So the first is the characteristics of job costing. You should be able to describe it here. I think this came in last year's paper. And it also includes batch costing, where the jobs or the units of the job that are done in batches. Right? Job cost sheet, you can use any format you like. Pick your favorite format. It can be sideways or downwards, but you must show the elements of cost on it: raw materials, labor, overhead, and then you have a markup on the cost, total cost. Okay, flow of costs that deals with the same three elements of cost flowing into the jobs, and at the end of the period you can also have working process as well. We also have to be able to evaluate the working process. That means we should be able to value it in terms of how much materials, labor, and overhead has gone into it. Please calculate the value, especially so would be the calculation of the overheads here. This again came in last year's paper, and it's set again to come this year. Prime costs and factory costs. Prime costs is made up of the direct costs, direct labor, direct materials, and direct expenses. The factory costs, the other costs, other than the prime costs that are related to the factory. They are mostly made up of what we call factory overheads. Okay, to get the factory overhead into the cost of the product from those factory accounts, we're gonna need to use a predetermined overhead rate. Predetermined overhead rate, you need to know the formula for that. POHR is equal to the total overhead divided by the activity level. Both of those will be predetermined. They are budgeted. Okay. Over or under absorption of overheads. Right. When you use the POHR to apply overheads to the jobs, then when you compare it with the actual overhead that was done on the job after the job done, you will have either over apply or under apply. Absorption is another word for applied, right? And you will account for it in your income statement, the over or under absorption. Okay, so let's go on to the next slide. Our next topic is activity-based costing. For this, we need to be able to identify the cost drivers and choose cost drivers for different activities and so on. We might also have to be able to name the 4 steps in the activity-based costing system in establishing an activity-based costing system. Okay, then we have activity levels. This talking about unit levels, batch levels, and those type of thing. Activity rates. We should be able to calculate the rates using the cost drivers or activity drivers from here. Okay, so it will be equal to the total overheads divided by the activity level. Then let's take a look at the next topic. Okay. Marginal costing and absorption costing. The marginal costing techniques are those techniques that involve the use of the contribution per unit. Okay, we can use the marginal or variable cost to calculate the contribution per unit, and from that we can apply it to different uh, decisions. That is called marginal costing techniques. Absorption costing has to do with the use of the POHR to allocate costs, or to apportion costs rather. Income statements, you need to be able to produce a marginal income statement with open and closing stock. 9 out of 10 times perhaps you don't get both open or closing stock, you might just get the closing stock. And absorption costing income statement as well, and be able to account for the difference between the two statements using the same data. The net income will come up to a different figure. If you look at my videos, you can see that some of the one of it at least has the how to do the reconciliation of the net income between the two. The difference is really supposed to be the fixed costs in the opening and closing stock. Okay, so you should be able to use marginal costing to value the inventory, as well as absorption costing to value the inventory. Okay, let's take a look at the next slide. Okay, our next topic is budgeting, and these three items here, A, B, C, you can find them in any textbook on the topic. I would suggest you use the study guide, the Keep study guide. They have a lot of things on these. You can also look at my videos. They give you a good idea of what these things are about here. You must be able to do what is called the master budget, which includes a cash budget and supporting schedules of collections and disbursement. Collection just means the collection of the accounts receivables and the cash sales, the pattern it follows, how much you receive each month and so on. The schedule of payments is the opposite of that, the disbursement, and you should be able to produce a schedule. If you look on the channel again, you would see some of my videos deal with that. You should be able to do a purchases budget. Well, last year we got the purchases budget, sales budget, production budget, exclude the forecast statement and balance sheet, right? So you will not get the income statement or the balance sheet to forecast, because you already would have done a lot of those in unit 1, right? I am thinking you might be getting one from here and here, okay, with some part C's, B's and C's coming from here. Okay, let's take a look at the other slides. Okay. Last part is the cost volume profit analysis of CVP. Usually this is done on a chart called a break-even chart, but you will not be required to draw a chart, but you should be acquainted with the formulas. Okay, so you need to calculate the break-even formula, and the break-even point in units and dollars. Now all these formula utilize what is called the contribution. Okay, so you have 5 formulas here. You can easily memorize these and get all the this full marks in this section here. Break-even formula, the fixed cost divided by the contribution per unit will give you the number of units. If you want to get it in dollars and cents, then you just have to multiply it by the selling price. Okay, break-even points in units and dollars, as you see. You just take the break-even point in units that you get here and multiply it by the selling price in dollars and cents. Contribution margin, you should be able to give this in dollars and cents or as a percentage. Alright, as a percentage, you just gonna multiply by 100, right? Margin of safety is the difference between the break-even point and whatever point that you are producing at. So if your break-even point from here turn out to be 60 units and you are selling or producing 70 units, then your margin of safety would be 10 units, the difference between it. A target profit, to calculate the target profit, you use the same formula here as the break even. You just add on the target profit to the fixed cost. So it becomes fixed cost plus target profit divided by contribution per unit will give you the amount in units. If you want to get it in dollars, again you multiply it by the selling price. You don't need to do anything fancy with the contribution per margin. Okay, so that brings us to the end of the topics, and we will be putting up the video very shortly, and I hope that you have a wonderful exam. You go ahead and you pass your exams. If when you pass, I would appreciate it if you let me know what grades you got. Okay.